I saw firsthand my whole life is that institutional capital is that pool is much larger than retail, right? And so by going to businesses and saying, hey, we can offer a better model for you versus the status quo, if you support AUSD and utilize us, right? They are now in turn going to their users and saying, hey, actually, we're going to build our best products around AUSD because we're actually part of this economic value chain.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Nick VanEck, who's the founder of Agora. Nick, great to have you on.
Yeah, thanks for having me, Tony.
Nick, Agora launched a stablecoin, AUSD. I have a lot of questions around that and how this stablecoin will be used, but let's start with your background. Tell us a bit about yourself and your professional background.
Yeah, so I spent most of my career as a technology investor. My family runs an asset management business, so it may not be a surprise that I got into markets and investing at a very early age. Always, really thought that I wanted to get into the investing world and make that my career. And so I started, right out of school, focused primarily on enterprise software at the growth stage, and did that for most of my career before starting Agora. Moved on to another firm called General Catalyst, which is a large multi-stage venture firm. Did much of the same there. But then DeFi summer came around and slowly all my personal time got sucked up by crypto. And having spent, my day job in cloud software, I felt that blockchain was the back-end innovation that financial services and payment companies never had, and that blockchain would eat that world in a very similar way to how cloud ate on-prem and a lot of human-driven workflows within cloud software. And so decided to start Agora about a year and a half ago, officially started it about a year ago today. And yeah, we've been growing fairly quickly, and it's been a pretty busy year.
Well, congrats on the 1-year anniversary. Amazing stuff. And I want folks to understand your background, your family. Your dad is, of course, Jan VanEck. VanEck is one of the big firms out there, and I followed your father for years and learning about investments. You mentioned that, your natural path was to go into the finance and so forth. But how did you kind of discover crypto, and did you tell your father about that, or how did you guys both discover crypto?
Yeah, so I actually started, my own portfolio when I was younger than 13. My dad managed on behalf of me. And I spent my years in summers in college trying to figure out what I wanted to do in the investing world. Because there's a lot of different things you could do. You could do passive management, like a lot of what VanEck's business is, like ETFs, and just design good products, index products. You can actively manage, whether that's like a long short hedge fund. You can do buyout, VC. And so I was trying to figure out what I really liked. I liked, what I liked specifically about investing is the intellectual curiosity required, that you were competing with, in my view, some of the smartest people in the world because there was a lot at stake, and that you had to put your money where your mouth is. And I felt that, most people didn't do that in sort of the rest of the world. And so I spent my summers trying to figure out what I wanted to do. Was working for a hedge fund one summer, and they were actually buying Bitcoin at the time. This was a $20 billion deep value hedge fund at its peak. And the founders of the firm were very intellectually curious and were like, why are there these 3,000 cryptocurrencies that have already been launched? And this was, early 2016. Most of the other crypto. There's like ETH, Litecoin, and then there's, Raven Coin,
Yeah.
Rails blocks, etc. And they had this view that Bitcoin was going to eat a large chunk of the gold market. And that was something that, immediately resonated with me because my family runs one of the largest gold miner funds in the world. And so I sort of grew up getting Krugerrands from my grandfather,
Mm.
and, grew up around a bunch of gold bugs. And so that's when I first got exposed to it. It took me about a year to convince him that Bitcoin was like this real thing. But he's very open-minded and sort of dove right in. And VanEck was the first institutional firm to file for a Bitcoin ETF. They did that back in 2017. Um, and then, I liked the hedge fund, but realized that it was a little bit too short term, and I wanted to focus on more long term projects. And so found my way into technology investing. And I really liked that you were building companies at the front end of the tech curve and building teams versus financial engineering, which is a lot of what buyout private equity was.
Mm.
And so love that, did that for over 5 years. But it was very clear to me that uh, like blockchain was finally at the point where it was going to eat financial services and payments. And when
Mm.
I got into crypto, ETH was trading at like a few bucks. There were no real dApps, like not really that many real users either. And even after the ICO boom, there still was not much going on. It was really like DeFi summer that I think was the first true step function change in like crypto applications and usage. And to me, with stables, they were just the stepping stone into like the broader institutional adoption of blockchain technology. And we felt that we could build a better model, and so left my firm about a year ago to start Agora. And yeah, it's been busy.
Wow. So are you targeting more of the enterprise level adoption of this stablecoin AUSD, or will it also have a retail market, kind of like the tethers and the USDC and so forth?
Yeah, ultimately, I think any healthy market has a combination of both institutions and retail. For us, I would say we're more focused on going after, the businesses and using those businesses as our go-to-market engine to the rest of the market. Something, that, I saw firsthand my whole life is that institutional capital is, that pool is much larger than retail, right?
Mm.
And so by going to businesses and saying, hey, we can offer a better model for you versus the status quo, if you support AUSD and utilize us, right? They are now in turn going to their users and saying, hey, actually, we're going to build our best products around AUSD because we're actually part of this economic value chain. Whereas with USDC, about half the income of USDC goes to Coinbase, the other half goes to Circle. And so if you're a centralized exchange or a custodian or a dApp that is not, one of those two companies, you're cut out from that economic value chain. And the
Mm.
same is true for everyone but Tether, right? And so what we're doing is we're going to exchanges, dApps, whomever, and saying, hey, you should be part of this, right? It's actually you that is driving utility and liquidity for these assets. And by incorporating Agora into your app, like, you'll have a better business, right?
Mm.
And so that's resonated with a lot of people. And so a lot of these businesses are then either reducing on and off ramp fees around AUSD, reducing trading fees, upping their points program for AUSD. There's one app that's like triple the points if you use AUSD versus USDC. So they're all coming up with their own creative ways to drive AUSD adoption. And so ultimately that should trickle down to, I would say, the non-institutional or enterprise market. But I view healthy markets need to be a combination of both those categories.
Yeah, absolutely. And to your point, like going to some of these enterprises which have retail using their services would be an easy way for distribution in a sense and getting more people to use the app. So if you went to, I don't know, well, if you let's say VanEck,
Yeah.
right, it's easy distribution throughout their current customer base. And by the way, will VanEck use AUSD?
Yes, they have their own liquid fund and venture fund, which I imagine will be using it in some capacity.
Hmm. Tell us a bit about what blockchains AUSD is currently available on and plans to expand beyond that?
Yeah. So we started on Ethereum mainnet towards the end of this summer. Launched Avalanche, Sui, and on Mantle, both each a month after the other. Our most active chain to date is Avalanche, although we're seeing the ensuing chains also growing at the same rate in terms of volume and AUM. In addition to those networks, we already announced that we'll be on Injective, so that'll be coming soon. And then there's a few other large networks that will be coming to. One that we're particularly excited about is coming to Polygon's Ag Layer. So we won that RFP against the largest players in the market today, and so we'll be going to that network natively. Once the Ag Layer is up and live, and so that's one that we're particularly excited about. And there'll be a few more announcements coming over the next few months. And then I think we'll probably slow our deployment schedule, starting in Q2 of next year.
Mhm. And tell us about your reserves. What does this consist of, and where is it being custodied?
Yeah, so from the get-go, it's important to be institutional grade and actually have scalability, right? And so one of the advantages of being a VanEck is that they have large asset bases at various banks, right? And that's been particularly valuable over the last year, given Operation Choke Point 2.0 and the reluctance of banks to touch crypto. And so State Street, which is one of the largest GSIBs in the world, that's a globally systemic bank, is the cash custodian and the fund admin of the Agora Reserve Fund.
Hmm.
That is in a Delaware Reserve Trust. And so the majority of the assets sit with State Street. We have a very small percentage with what I call settlement banks, so banks that interact with our customers directly. And so we use a variety of banks there so that it's very quick settlement when people want to redeem. And the assets are primarily in overnight reverse repo and then short-dated U.S. Treasury bills. Those assets are managed by VanEck. So you have a money manager that manages over $100 billion, globally regulated, been around for 70 plus years, managing the assets, not just Agora. So they're safe, secure, and theoretically we could take in hundreds of billions of dollars tomorrow, given State Street size. I don't think that's going to happen, but hopefully one day it is the case.
Yeah, absolutely. How are you guys set up to avoid situations like what happened to Circle with, I believe it was Silvergate, if I'm not mistaken?
Yeah, Silvergate, SVB.
Yeah.
Yeah, so it's by relying on a very large bank, right? That is a GSIB, right? So one of the mistakes one of the challenges of using regional banks and using uninsured bank deposits that are out of a trust structure is that they are then not as safe as if they were in a multi-trillion-dollar asset bank where the assets are in a trust structure. And so from a structuring perspective, we wanted to nip that issue in the bud from the get-go, and learn from, I would say, others' mistakes. And so that's a circumstance that will not happen with us, unless the world is on fire.
Yeah, and then we have bigger problems. Yeah.
Yes, correct.
Are you planning to, you may have mentioned this earlier, but are you planning to offer yield and both on the institutional and the retail side?
Yeah, so the way that we think about it is ultimately you can't pay non-KYC retail if you're interacting with the banking system, right? And so we designed our model around, one, being compliant, but also two, delivering value to the people that are driving it to the network. And so what we do is we KYB the end business, and then based on the assets within their perimeter, we share the majority of the net income, right? So if there's 100 million of AUSD on a DApp or an exchange that is KYB'd with us, we pass the majority of that income through, and then it's up to that business to choose how to build the best products around AUSD, right? So that could be by just passing incentives to users. It could be by reducing trading fees or reducing the borrow fees or incentivizing borrows or incentivizing deposits. It's totally up to them. But that's ultimately how we are driving value back to the system. And if folks want a pure yield product, I think pure yield products are better, right? But ultimately, stables and yield products are quite quite different. And so we want to reward the people that are actually helping drive utility and liquidity to our stablecoin network, which is very different than, if someone wants a 10% on a private credit fund and just sort of sit there for 6 months.
Yeah, that definitely makes sense. Now you mentioned KYC, and we know stablecoin legislation is being worked on here in the US, and it will most likely include a lot of that KYC AML. In the EU, they passed the MiCA regulation, which seemed to disrupt Tether's business, and I believe it's more related to KYC. So talk to us about the importance of that and how these regulators are going to, put together the legislation for this market.
Yeah, so I think there's a few things specifically with Mika that Tether didn't agree with. Yeah, some of them I actually, I agree with them as well. Requiring X percentage to be in bank deposits, which are uninsured, is probably not safe just based on what's happened with some other issuers. But maybe just touching on, broadly, like how I think about this is, the banking system, if you're a fiat coin, you interact with the banking system, right? And they are very strict around KYC and AML, and like it's core to their business to maintain that everyone is compliant. And if that's not the case, they're going to shut you off, right? And so, as an issuer, you need to be focused on adhering to appropriate regulation that a lot of these large banks are going to have to follow, which Tether does to a degree. And I would say they're relatively compliant depending on the jurisdiction. With regards to like KYC and AML, it's just, you can't pay non-identified wallets, right? Directly, that's probably a no-no. And so we're going to see, and, a lot of these bills that are passing with stablecoins in particular say you can't pay yield directly to people, right? Those are specifically yield products. And so that's why, from our perspective, you should be rewarding the businesses who are not ultimately necessarily the holders, but then they can drive value to your product and make it a better experience for the users, right? Whereas like, okay, if you are a yield product, like you're in an entirely separate bucket, regardless if it's in the US, the EU, or like, Singapore, Hong Kong, somewhere else.
Question for you, and this may be a dumb question, if I'm thinking about it right. You as the issuer, let's say you're working with, I don't know, Bank of America or something like that, and you want to use AUSD. Are you responsible for the KYC, or is Bank of America responsible for it based on who's using it through their system?
Yeah, so we KYB anyone that is minting and redeeming the asset, right? So anyone that is sending us fiat currency or redeeming AUSD, we do a rigorous enhanced DD KYB, but ultimately the stablecoin is freely transferable with the exclusion of course OFAC sanctioned wallets and some other edge cases. But beyond that, it's freely transferable, and we engage with a lot of the largest monitoring providers to make sure that AUSD is only in good actors' hands, right? And so it's ultimately up to us, right? And the banks are trusting that we're doing due diligence on all of our customers and have these programs in place. They look at our AML, KYC policies as well as other policies that we have in place.
Mm. And a follow-up question to the EU, Micah, are you guys only in the US market right now, or are you global or only in certain
Yeah,
regions?
we're actually primarily focused on the non-US market.
Oh,
So Asia, Latin America, to me, that's where stablecoins are most valuable because you have emerging market latent dollar demand and cross-border payments. Like those, that's why stablecoins are most valuable today.
mm,
Within the US, we all have relatively good banking services and payment services. And so if you're being intellectually honest, I think the value of a stablecoin is 10x more or even 100x more valuable outside the United States, right?
mm,
In countries where you may not have strong rule of law or good financial service institutions, or the financial services institutions may be very costly just to even have an account, right? In many countries, double-digit percentages of the population are unbanked, right? Because they're just like not good enough. And so like this is where technology can come in and solve those problems and give everyone access to secure financial services, right, through DeFi. And so those are the markets that we're really focused on.
Do you foresee that these money transfer companies like your Western Unions and MoneyGram and so forth are going to use stablecoins like AUSD, or may they try to launch their own Although we've seen some of them, I think they attempted to, but it hasn't worked out well. I think of JP Morgan and JPM coin because it's not on a public blockchain. It's not free to move. What are your thoughts on the future of these companies?
Yeah, I think a few will launch stablecoins. Ultimately, I think that's not a business that they should be in. Like, I think they should just like leverage someone like us, where they're making the majority of the underlying net income that's on their platform, and they don't have to worry about compliance, building the network, liquidity management. Like, we handle all that for you, right?
Yeah.
And so just focus on the end relationship with your current customer base and providing like a better service. And so if it's, the income from the stable that folks want, like, we're happy to provide that. And then you participate in this broader liquidity network, right? Building a stablecoin network is extremely hard. That's why I think you've seen many people start to do it and then abandon it. Because unless it's your core business, it's probably not something that you should be doing. Right? I think other service providers like us can come in and sort of cut the margins out from under USDC and Tether, and hopefully make this a much more egalitarian monetary system.
Mm. And with regards to like wallet support, tell us a bit about that. Are you currently partnered with any major wallets and things like that?
Yeah, so most of the wallets can import us if they want. So we're Consensus actually is an investor in us. So MetaMask, any of the major wallets, as long as you import our ERC20 token, it's available. And so we're planning to launch a few campaigns. And we've been working closely with the OKX wallet team,
Yeah.
as well as a number of the centralized exchange wallet teams. Most of them have built really fantastic products, in addition to standalone wallet companies.
I used to work for OKX, so if you need any help there, let me know.
Yeah, no, they're great. And like the wallet is like top tier,
For sure.
particularly like their stablecoin page, which like sort of just shows you like a menu of opportunities. Like, okay, you want to make 20% on AUSD or USDC USDT. Like, here are all the different lending protocols or AMMs. It's really well done.
Mm. Um, as much as you can tell us, what are some of the strategies and tactics you have for growth? And once again, I don't want you to give away your secret sauce, but what's on your roadmap?
Yeah, so one of the things that I believe is, as the issuer, you have the right to do everything downstream from you cheaper, right? Particularly on the on and off ramp side, the infrastructure side, and then eventually some things in the app layer as well, right? I think that's one of the things to me that has been interesting is, USDC abandoned their API product. I think that's an area where you can see us leaning in at some point in the future. Something that I'm also focused on is like, what are the next 100x markets for stables? And so, I don't want to get too deep into that, but I can tell you we're not trying to compete for BTC price discovery on Binance against Tether. I think that's a losing battle. And
Right.
so we're focused on other things, but I think crypto trading is sort of V1 of stables, and V2 and 3 are going to be much bigger than the status quo today, which is like, it's mostly crypto trading. So we're going to be focused on a lot of those use cases.
Um, Anything on micropayments, or is it too early for you guys? Where people can do microtransactions or creators can get streaming revenue and AUSD and things like that?
Yeah, so we're working with a few of the SocialFi companies, a number of gaming companies, and so that you'll just start to see AUSD just popping up more in your favorite ecosystems and apps, because it's ultimately better for those businesses, right? Because they actually get to capture a lot of the economic value. And so on the micropayment side, there's not much that we're doing there yet, but you will see a lot more announcements with us and different payment providers early next year, where we'll get much more deeply embedded in the payment ecosystem.
Mm. Talk to us a bit about your vision for payments, or how you see the payments market evolving with the mixture of stablecoins and crypto assets. Are we going to see the elimination of the Western unions and the MoneyGrams? Because I can just do peer-to-peer payments and I can use the stablecoin, settles instantly, very low fees. I could do it 24/7, no delays and things like that.
Yeah, I think you won't see the end of Western Union, but you'll see their margins collapse, and I think you'll see their market share collapse,
Mm.
right? If you have a relative, whether it's in Singapore or Australia or Argentina or Germany, right? It's just stables are not just 10x better, like 100x better,
Mm.
right? The still I would say hard piece, it's not that hard, but it needs to be figured out is the on and off ramps, right? And does the stable that you're sending have good on and off ramps, right?
Right.
Which is on the infrastructure side and obviously something that we'll be focused on. So I think stablecoins will really start to eat into the cross-border just dollar markets,
Mm.
um, and the P2P remittance markets, which I think they've already done pretty good job of making a dent into. And then I think in terms of cross-border things, FX is next, right? So today a lot of people are doing one leg of the trade in stables and the other is like still in fiat. I think you'll start to see the growth of a number of non-US dollar stables over the next 5 to 10 years, which hasn't really occurred yet.
Mm.
I think ultimately the market size there is limited,
Yeah.
because the US is just the dominant currency for global trade. It's the global reserve asset, but also people that aren't even Americans want to hold dollars, which
Yeah.
isn't really the case for other currencies. Like you've had all these euro stables that have been around for years now, and I think they're not really going to take off, other than for FX reasons and
Mm.
like basic balance reasons. Because just like no one outside, like as an American, I'm not holding a euro,
Right.
right? Whereas that's not the reciprocal is not true.
Yeah, absolutely. And the US, of course, has the advantage is having the world reserve currency. So everybody wants the dollars. And until there's some major geopolitical shift, that's going to be the case. And stable coins, US backed stable coins make sense. What are your thoughts on the dialogue that's happening in Washington, D.C. of helping to preserve the world reserve currency status by having USD backed stablecoins and that the US government needs to move forward and getting proper legislation and clarity so companies like yourself can feel free to build?
Yeah, I think the announcements over the last few weeks have been really positive,
Mm.
for development within the United States. I think it's very clear now that US dollar stables are like the best economic and almost defense tech weapon that the US government hasn't created or a
Mm.
defense company hasn't created, because what we're doing every single day is going and trying to grow the dollar's usage outside the US, right? Um, Ultimately that reduces the cost of the federal debt, and expands American soft power globally, which is great. I think people from both sides of the aisle recognize that. And I think particularly with some of the appointments, although they're pending over the next few weeks, and some of the resignations, things, within the states are looking much more receptive to crypto, and so I think things seem to be moving nicely, which is great.
What are your thoughts about CBDCs and the mixture of this with stablecoins in the open market? Now, we haven't really seen any major CBDCs. There is talks that China has a digital yuan. I haven't seen it. I've never seen anybody use it. But, there's a talk of wholesale versus retail. So, do you think the CBDCs are going to be running behind the scenes with the federal government, so to speak?
I
And
hope not.
right. But use retail is going to be using stable coins. Like I'm not a fan of CBDCs either. I would rather the free market stable coins, right? But it seems some governments are working on these things.
Yeah, each country is different. I don't think they'll ever be well received in the United States,
Hmm.
because I think it's a dangerous tool for anyone to have, right? Is okay, I can basically delete the money from your bank account if you say political speech I don't agree with, right?
Yeah.
And I think in the United States over the last couple of months, there's been a lot of concern, right, around censorship, right? And it's sort of us living in like this crypto Twitter bubble, right? I think most folks are aware of that, right? And sort of I came at Bitcoin originally because I'm relatively like libertarian, and believe that ultimately like federal debt is bad, and
Yeah.
federal government power is scary, if used improperly, which almost always inevitably ends up being the case. And so CBDCs, I think, are a scary weapon that hopefully are never introduced in America, but much less any other country in the world. But I think other nations are maybe going to be less lucky than us. I don't know.
Yeah, no, it's a great point, and it's a lot of it's TBD, but we know, like I said, like China seems to have one in the wild somewhere that they're testing, and but thankfully here, at least, within our walls, so to speak, uh, it seems like the country's moving in the direction no CBDCs, but more free market.
Yeah, I just feel like don't think the American people like would like tolerate that. Like it would just be like a little bit crazy. It'd also like kind of blow up the existing banking system. So I think
Hmm.
fortunately it's not something that's going to happen here.
So on that note, when we think about currency, right, and the movement of money and how the Federal Reserve and the Treasury track all these things, and they have levers they pull to inject liquidity, move the velocity or increase the velocity of money and things like that. Will stablecoin legislation, do you think, mandate that you have to connect to the Treasury in some way via API, and they need to track all the issuance and everything like that? Do you think things like may go that direction?
Um, I would be surprised if the legislation was that technologically forward, where you have to connect it with the API. I think we'll just have to see. I'm not really one that likes to speculate on legislation just because I have seen how slow moving things can be in the United States. I mean, look, it took 7 years from VanEck, which was, a top 10 global ETF issuer, to file for a spot product ETF for it to go live. Like very vanilla product. There's like 3x inverse levered oil services ETFs, but spot Bitcoin ETF was verboten. So I'm out of like the legislative guessing game these days, and I just react to what happens.
Yeah, for sure. On that note of Bitcoin, are you blown away by the growth of this asset? It is now in the political realm. It's now in the TradFi realm, obviously, with ETFs. Countries are buying it. There's a Bitcoin strategic reserve bill on the table. States are also looking to do the same thing as the federal government. What are your thoughts on the growth?
Um, I'm not surprised. Like this was my thesis since 2016 is that it was going to subsume the gold market because it's a much better product. As someone that grew up in online, right? So I'm not surprised. I will say it happened a little bit quicker than I expected, to be honest. I didn't really think, and I really never. The one thing I am surprised about is it becoming more of a political issue within the United States. It never should have been.
Yeah.
And I think a lot of that was in part because you had Sam Bankman-Fried donate so publicly to political organizations, and that then had knock-on effects. So I am a little bit surprised by that, but of the growth of the asset, I'm not. I think this was almost inevitable. Once the debt printing train gets, going on the tracks, it's really hard to stop it. And, Bitcoin is in some ways an antidote to that. So
What is your outlook for the market in 2025? Do you see continued growth, kind of following the 4-year cycle?
I think so. I think we're obviously in a period of elevated enthusiasm, given the change in attitudes, within the federal government, that are probably coming within the United States, and the U.S. is the largest global economy, so that's a big deal. I also think a lot of G7 countries look at the U.S. Um, financial services industry for sort of like guidance on what to do next. Um, so I think we'll have continued growth within 20 throughout 2025. I sort of though view like us as in being like inning number one of like real crypto, which is like non-speculative assets, and like inning number 6 or 7 of speculative crypto. And so I think speculative crypto will be a little bit more short-lived next year, whereas I would say like real crypto, so just the adoption of blockchain technology, stablecoins, tokenized assets will kind of continue to compound at a very steady rate. And I think that's going to be true for the next 20 years, right? And so I think that part of the industry is going to be way less cyclical than the speculative aspect. And so, we were expecting it to be a great year. Maybe things are accelerated a little bit by what's gone on in Washington. But, where we sit in sort of the stablecoins, institutional capital world and institutional products, that is going to be growing at a really high compound rate for the next 20 years.
Now you mentioned tokenization, and we're seeing some of the largest firms on Wall Street, BlackRock and so forth, that are starting to tokenize. You are doing a form of tokenization with stablecoins. Are you planning to, or are you thinking about other forms of tokenization that Agora may want to get involved with, whether it's tokenized gold, tokenized real estate, and things like that?
Yeah, not at the moment. Ultimately, we just want to be the op stable between all these different assets, right? And so we'll plan to work with a number of different asset management companies, RWA providers. Like we just want to be that neutral glue that stitches everything together. We don't want to launch competing products. We're probably not going to ever launch a non-US dollar stable. It's certainly not on the roadmap now, but I guess never say never. Or any sort of other tokenized product. We ultimately just want to work with other issuers of those types of assets and help make their products better.
Mhm. You mentioned something earlier about in 2016, you saw Bitcoin's rise in a digital world. You're on the younger side. I think you're probably younger than me. Um, we got Gen Z, Gen Alpha, and all these folks, right, that are coming up and they live in a digital world and they don't necessarily care about gold and stocks, but they like crypto. They like meme coins. I'd love to get your take on that. And it seems that they're going to gravitate to stable coins and gravitate to Bitcoin and crypto and things in the digital realm versus, the older generation. What are your thoughts on that change?
Yeah, thankfully I'm a millennial. But Gen Z, I think one of the things that's going to influence their behavior, I think more so than my generation or older generations, is that they live in like a social finance world,
Mm,
right? Like something that I didn't really ever think about when like first getting into Bitcoin like 8+ years ago now, was how much of a role communication technology will play on sort of investing or asset prices. Um, you sort of saw this with almost like the SVB uh bank run, right? Is like
mm,
that was propagated on Twitter and then everyone withdrew their money and then the bank imploded, right? Um, people say, "Oh, look, this meme coin's going up," and people just pile in, almost instantaneously. Like that, I think is very different from 10 years ago, 20 years ago when it's like, okay, put money, in the S&P 500 and just sit on it. It's probably going to compound at 6, 7% a year. It's very safe, secure. Like there's like sort of this social element now that's been introduced to asset prices, whether it's crypto or other things,
mm,
um, that I think is actually what's like driving maybe a behavioral change that I don't necessarily know if it's good or bad. Like, is it, if people are spending like their savings on things that can lose their value in an hour, like the entirety of their value in an hour, like that's just gambling and that's probably not good.
yeah.
But if people are, moving money from like entertainment, right? Like, oh, I was going to spend 30 bucks on a movie tonight, well, maybe I'll just trade meme coins instead. Like that's probably more innocuous. So I don't, I don't anticipate people's behaviors changing. I think some of it's definitely not good behavior. And there needs to be some moderation in terms of content and what people are able to do. But you just kind of have to adapt, right? It's like when
Yeah.
the internet got going, I think it was hard to foresee all the things that it would change. And, this sort of 24/7 terminally online ability to communicate with large groups of people is also changing how people invest, spend their money, spend their time too, right? So, I think a lot of the younger generation will continue to invest time and energy in crypto, but I think hopefully they, uh, spend time on fixed income and equity products as well.
Yeah, for sure. As you were talking about some of the behavior things, I was thinking about the pump.fun madness that's happening. I don't know if you've
Yeah,
seen
like
any
that
of
stuff
that.
is scary.
Yeah. It's crazy. But
Let's mark the date. Today is November 25th. Like the stuff that's going on with Pump.Fun right now is like a little bit too much. That probably needs like, well, it certainly needs content moderation. Like, that
absolutely.
is like the stuff that is not acceptable.
But the idea though, the infrastructure and the concept, right? That could be applied in many great ways. For example, you as an entrepreneur, a company, right? If done in the proper format and the proper regulations are in place, I can bet on you. I could bet on Agora from day one. If Elon was to tokenize himself, would I invest in him? Hell yeah, because the guy's incredible. And I don't agree with everything, but he's incredible as an entrepreneur. Same
Yeah.
thing, Tom Brady, if he was still playing, tokenize himself. Yeah. Would I invest in dog number five meme coin that just started last night? No, but the
Yeah.
idea is it just depends on what it is that's being tokenized.
Yeah. I think some of it, if it was done properly, could be worthwhile. Um, Ultimately, though, I don't know if I want everything to be financialized, right? Like hyper financialization is probably not a great thing for society.
Mm. Yeah, and but part of the problem is until they fix this, people are dealing with financial hardship, inflation, and so forth. And
Yeah.
I think macro investor Raoul Pal, I heard him say about it. This is kind of an avenue they see. Oh, I can bet on this and make a bunch of money. Why not? I got nothing to lose. I'm not getting the same returns in other things. So once again, what they're betting on could be wrong, but I think that the root of all this is people are trying to find a way out, and that goes back to the debasement of currency, the money printing, and all these things that's happening.
Yeah. Yeah, I think some of the better things to do is probably just use stables in like Aave or Morpho or something,
Yes,
to protect yourself against that. But yes, I think some of this has been valuable to folks.
for sure. All right, Nick, got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
I could create my own metaverse. Hmm.
Where'd you put your Oculus or Apple
Yeah.
glasses on?
Yeah, I think probably going back into classical Greece, and it's not just because I saw Gladiator, which I know is based on the Roman Empire this weekend, Gladiator 2. But I studied classical history and majored in it in college. I've just been always fascinated by it. And yeah, I think like being able to like time travel back into that era, it would be really, really interesting. There's a lot of other different time periods I'd like to go back to as well to be like a fly on the wall, but that's probably number one.
Yeah, I would love that too. I'm big on history, so being able to go back to Rome or ancient Greece, whatever it is, it'd be amazing. Rapid fire questions. Favorite food,
Favorite food? Sushi.
favorite musician or band,
Um, Tiesto.
favorite movie.
Movie. Oh, this is a tough one. Um, I'll have to say Gladiator, the first one.
Oh
That
yeah.
may just be because I saw Gladiator 2 this weekend.
No, the first one's great. Like I
Yeah.
watch it all the time. My wife, like if it's on TV, my wife's like, haven't you seen this a million times? Like, oh, it's
Yeah.
really good. Favorite book.
Favorite book. My favorite fiction book is Aragon. So I love that series when I was growing up. That was like incredible. And I think I heard they're redoing the show. The movie was not great, but I hear they're redoing the show, and so I have high hopes. It'll be much better than the movie.
And when you're not working at Agora, what are you doing for fun?
Probably just spending time with family and friends.
Hmm. Nick, absolute pleasure. Love what you guys are doing with AUSD, and would love to have you back on as things progress. But thank you so much for joining me.
Yeah, thanks, Tony.